Let's talk about financial literacy. For a lot of managers, that phrase probably brings up images of, dusty accounting books and super confusing jargon. But look, this isn't about turning you into a CPA. Not at all. It's about taking numbers from something that causes anxiety and turning them into your single most powerful tool for strategic leadership. Let's break down exactly how to do that. So here's our roadmap. First, we're going to see what happens when you try to fly blind, without the numbers. Then we'll dive into the basic language of business. After that, we'll uncover the art of reading between the lines, see how to use finance as a practical framework, and finally, we'll pull it all together so you can create your own strategic advantage. To really see why this matters so much, let's start with a high-stakes story from a company we all know. Imagine you're the new CEO, and you're staring down a massive, massive paradox. This was the exact puzzle facing CEO Roger Enrico at PepsiCo back in 1996. Get this, the top-line number, their total sales, was at a record high, but their profits just weren't moving. When they dug into the numbers, they found a much more complicated story. Their beverage business was actually losing ground to Coke, and these huge investments they'd made in restaurants like Pizza Hut and KFC, they just weren't paying off. So what did they do? Well, a really deep financial analysis led to this massive strategic overhaul. In 1997, they spun off their entire restaurant business, basically making it a new, separate company so they could focus purely on snacks and drinks. And then they went on the attack. They bought Tropicana and Quaker Oats, which brought the powerhouse brand Gatorade into the family. But this wasn't a quick fix. It was a decade-long strategy, all driven by the numbers. And the result of this finance-driven strategy? It's pretty incredible. By 2010, PepsiCo's revenue had almost doubled to nearly $60 billion. Not just that, but their earnings and their stock price just blew past the market average. It's just a brilliant example of what happens when strategy is guided by a crystal clear financial picture. Okay, so this brings us to a really important question. If the numbers hold this kind of power, the power to literally transform a business, why do so many smart, capable managers just shy away from them? Or even worse, ignore them completely? Well, the truth is, managing without being financially literate is just incredibly dangerous. It really is like trying to fly a plane with zero instruments and a completely fogged up windshield. Sure, you might have a great feel for the plane, but you have no real data telling you your altitude, your speed, or if you're about to fly straight into a mountain. So to get comfortable in that cockpit, you've got to understand the instruments first. And that means you have to learn to see accounting not as math, but as what it really is, the fundamental language of business. When you boil it all down, that's all accounting really is. It's just a system we use to translate every single thing a business does, every sale, every purchase, every investment, into a set of numbers that tells a story. But here's the catch, and it's a big one. This language has its own grammar, where everyday words have very, very specific meanings. So to become fluent, you kind of have to unlearn a few things. For example, income is not the same as cash in the bank. Depreciation is an accounting concept. It's not a true measure of an asset's real-world value. And you know what's really surprising? Having too much cash can actually be a bad thing. It can be a sign of inefficiency. Mastering this vocabulary is absolutely the first step. Okay, so once you start to understand the language, the very next step is realizing something that most people totally miss. Financial reports are not pure objective facts. No way. They absolutely require interpretation. That's right. Just let that sink in for a second. A company's financial statement is not a perfect photograph of reality. It's much more like a portrait, It's shaped by the artist's perspective and the choices they make along the way. I absolutely love this analogy from the source material. It says that just like English majors can argue about what a soliloquy in Hamlet really means, managers and accountants can totally disagree on the best way to measure a company's performance. There's a surprising amount of subjectivity baked right into the process. So, what makes them so subjective? Well, think about it. For one, they're built on estimates of a future that's totally uncertain. 2, they're shaped by the natural optimism of the managers who are creating them. And 3, those public reports you see, they're really just the tip of the iceberg. They often don't have the detail you need to make smart internal decisions. The big takeaway here is this. You have to be a healthy skeptic. You have to learn to read between the lines. Okay, so if the numbers are this subjective language, how are we supposed to actually use them? This is where we make a really important shift from just reading the numbers to using them as a powerful framework for making much, much better decisions. It's so important to understand what finance can and can't do for you. Look, it can't tell you if customers are going to fall in love with your new product, but it can tell you exactly how successful that product needs to be worth the cost. It can't predict if two company cultures will blend together after an acquisition, but it gives you an economic framework to compare the different options. Finance doesn't replace your experience and your gut instinct, it adds discipline and structure to them. And this is what that discipline looks like in practice. It forces you to go from some vague idea to a really structured plan. You forecast specific outcomes. You translate those forecasts into actual numbers, projected profits and cash flows. You critically assess the assumptions behind your numbers. And finally, you quantify the value of your idea against other options. It's what stops ego and wishful thinking from driving major decisions. So when you put all of this together, when you understand the language, you learn to read between the lines, and you start using this framework, it becomes so much more than just a skill. It becomes your personal strategic advantage. And this, right here, is the ultimate takeaway. The real magic isn't just in the numbers themselves. It's at the intersection where your unique managerial experience meets these powerful financial skills. When you can combine your deep knowledge of your team, your market, and your products with a clear understanding of the financial story, that's when you become truly invaluable. So, I'll leave you with this question to chew on. Think about what's on your plate right now. Maybe it's about allocating a budget or championing a new project, or even just evaluating your team's performance. What's one decision you're facing where adding a little bit of this financial discipline could give you the clarity you need to move forward with real confidence?